How to Survive Inflation, the Intel. My dear friends, welcome back. Today we must confront a force that every investor, every worker, every saver in the world feels, often without fully understanding it. A force that quietly erodes your wealth, your purchasing power, your time, and even your sense of financial security. A force older than recessions, older than booms, older than market predictions. That force is inflation. But let me tell you a truth that very few modern investors ever hear. Inflation does not destroy wealth. Unprepared investors do. I have witnessed the power of inflation across nearly every decade of the 20th century. In the 1930s, when deflation terrified the world. In the 1940s, when wartime spending reshaped currencies. In the 1970s, when inflation grew into a beast that even governments could not control. And now, in your modern era, you face a new version of the same old enemy. An inflation driven by global shocks, supply disruptions, waves of uncertainty, and unprecedented monetary expansion. But regardless of the reason, the psychological effect is always the same. People feel poorer even when their income rises. People lose confidence even when markets grow. People become anxious even when their jobs are safe. Because inflation attacks not the numbers in your bank account, but the meaning of those numbers. Inflation is a silent tax, a relentless erosion, a thief that steals slowly enough that you don't notice until you do. And here is where the tragedy begins. Most people respond to inflation emotionally, not intelligently. They try to save harder at the wrong time, or they abandon saving entirely, or they chase riskier assets in desperation, or they freeze, paralyzed by the feeling of falling behind. Inflation doesn't defeat them. Their own reactions do. So today, I want to give you something far more valuable than a simple definition of inflation. I want to give you a framework, a way to think, behave, and prepare so that rising prices cannot dominate your life or dictate your financial destiny, because contrary to what most people believe, you cannot outsprint inflation. You cannot outworry inflation. You cannot outguess inflation, but you can outthink it. And that, my dear friends, is what an intelligent investor must do. Let us begin with a concept that most people never truly understand. Inflation is not a temporary inconvenience. It is a structural force. It has existed in every generation. It will exist in yours, and it will exist for your children as well. Inflation is not surprising. It is normal. What is surprising is that people still fail to prepare for it. And to prepare, we must understand not just what inflation is, but what inflation does to the human mind. Rising prices trigger 4 powerful psychological distortions. 1. Loss panic. My money is losing value. I must do something now. 2. Consumption impulse. Better to spend now before it becomes more expensive. 3. Risk desperation. Safe assets feel useless. I need something that grows faster. 4. Shortened time horizon. Planning ahead feels pointless. These reactions are not harmless. They lead to poor decisions, unnecessary stress, and long-term financial damage. But here's the good news. Inflation is only dangerous to those who face it without a plan. For those who understand its psychological tricks, inflation becomes manageable, predictable, and even an opportunity for disciplined wealth building. In this lesson, I will show you how to protect your purchasing power, how to avoid inflation-driven mistakes, how intelligent investors behave during rising prices, how to strengthen your financial life without fear, and how to build a strategy that remains effective from 2025 to 2035 and beyond. Inflation is a storm. But even storms have patterns, and every storm becomes less frightening once you understand its shape. Now, my dear friends, let us begin the real lesson. The first step to surviving inflation is understanding the very thing most people overlook, what inflation truly steals from you and what it never can. How to Survive Inflation, The Intelligent Investor's Guide to Rising Prices. Section, Why Most People Fail Against Inflation. Now, my dear friends, let us turn to a difficult but essential truth. Inflation does not defeat people because prices rise. Inflation defeats people because they react poorly to rising prices. In other words, the real battle is not economic. It is psychological. When inflation increases the cost of living, most individuals fall into patterns of behavior that feel rational in the moment, but are deeply destructive over time. Let me walk you through the 4 major traps I observed in my own lifetime, traps that are just as dangerous in your modern world. 1. The panic spending trap. When prices rise, many people begin to think everything is becoming more expensive. I must buy now before it gets worse. This instinct is deeply human, but financially harmful. It causes overconsumption, lower savings, weaker cash reserves, and even more financial stress. Inflation convinces people that spending faster is smart, when in reality, it accelerates the erosion of their wealth. You cannot outrun inflation by spending faster. You can only weaken your defenses. 2. The false saving trap. I'll save whatever is left someday. Another group responds to inflation with the belief, saving is pointless. My money is losing value anyway. So they stop saving entirely. But my dear friends, the purpose of saving is not merely to accumulate currency. The purpose is to build discipline, reserves, opportunities, and psychological strength. Inflation does not make saving useless. It makes saving more important. Because without reserves, you become emotionally fragile, and emotional fragility leads to financial fragility. The investors who stop saving during inflationary times destroy their future optionality. 3. The desperation trap. I need higher returns immediately. This is the most dangerous reaction of all. When people feel their purchasing power falling, they begin to chase risky assets, speculative trends, inflation-proof promises, get-rich-faster illusions. In every inflationary decade I witnessed, people ran toward risk with the belief that speed was the solution. But speed is not intelligence. Speed is panic wearing a disguise. The moment an investor's expectations rise faster than his understanding, disaster is not far away. Inflation seduces people into abandoning prudence, and those who chase the highest returns usually fall from the highest cliffs. 4. The time horizon collapse. This is the psychological phenomenon that destroys more wealth than inflation itself. When prices rise, people shift mentally from thinking in years to thinking in weeks. They shrink their time horizon until long-term thinking becomes impossible. But wealth is built on patience, delayed gratification, compounding discipline, consistency. Inflation tricks people into abandoning the very principles that protect them. When your time horizon collapses, your decision quality collapses, and poor decisions, repeated over years, become catastrophic outcomes. The root of these mistakes: inflation creates emotional pressure. Inflation creates an illusion that you are falling behind, and for many, this illusion becomes unbearable. But here's the lesson. Inflation pressures the impatient far more than it pressures the prepared. The prepared investor stays calm. He focuses on fundamentals. He maintains his reserves. He evaluates value, not headlines. He understands that inflation is an environment, not an emergency. Most people lose to inflation because they lack a framework, because they respond emotionally, not intelligently, because they allow panic, urgency, and fear to dictate their actions. But you, my dear friends, you will not repeat these mistakes, because now we turn to the heart of this lesson. How intelligent investors actually survive inflation and sometimes even grow stronger because of it. Let us continue. How intelligent investors survive inflation, the intelligent investor's method. My dear friends, now that we understand why most people lose to inflation, let us turn our attention to a far more important question. How do intelligent investors survive inflation and even thrive during it? The answer is not complicated, but it requires discipline, clarity, and a philosophy of thinking that does not bend when prices rise. Let me walk you through the exact framework I taught my students, a framework that withstood every inflationary period of the last century and will continue to protect you through 2025, 2030, and beyond. 1. Focus on real return, not number return. Most people measure their wealth in nominal numbers. I earned 8% this year. My salary increased. My portfolio grew. But if inflation is 10%, your 8% gain is a 2% loss. This is why intelligent investors think differently. We measure wealth in purchasing power, not in digits. A portfolio that grows slower than inflation is shrinking. A salary that rises slower than inflation is falling. Cash that sits idle is evaporating. The first rule is this: ask not what your money earned. Ask what your money kept. When you adopt this mindset, you stop chasing illusions and you start building resilience. 2. Strengthen your cash flow, not just your savings. Many people believe fighting inflation is about saving harder, but inflation punishes stagnant savings. So what does the intelligent investor do? He focuses on cash flow, not just cash stockpiles, because cash flow replenishes, adapts, grows with skills, grows with opportunity, grows with time. Inflation cannot defeat an individual who consistently increases the rate at which money enters his life. This does not always require second jobs or extreme measures. Sometimes it requires negotiating better compensation, developing a valuable skill, creating a small additional income stream, eliminating emotional spending leaks, reallocating time toward higher value activities. Inflation is harder on people who depend on a single, inflexible income. It is far gentler on those who build multiple sources of financial oxygen. 3. The margin of safety applies to life, not just investments. In my books, I taught that the margin of safety protects an investor from the unknown, but here is something I rarely wrote. Something I taught only in my personal lectures. Your personal finances need a margin of safety even more than your stocks do. During inflationary periods, unexpected expenses rise. Emergencies cost more. Volatility increases. Certainty decreases. A financial cushion is not a luxury. It is a psychological anchor. It protects you not only from bills, but from panic-driven decisions. That could cost you far more than any price increase. Even a small margin of safety creates calm. Calm creates clarity, and clarity creates opportunity. 4. Buy what inflation cannot easily erode. Inflation destroys weak currencies, weak assets, weak habits, weak planning. But there are certain principles and assets that inflation cannot easily touch. Skills. Inflation cannot devalue something you know how to do. Your competence appreciates. Time horizon. Investors who think in decades, not months, rarely suffer from inflation's noise. Ownership of productive assets, businesses with pricing power, and durable demand can pass inflation on to customers. This is why intelligent investors prefer resilient companies, cash flow positive assets, undervalued opportunities with real earnings, businesses with strong balance sheets, investments that create value, not just excitement. Inflation is brutal toward speculation and kind toward substance. 5. Reduce emotional spending, but don't starve your life. There is a common mistake in inflationary times. People either stop spending completely or they spend impulsively. Both are errors. Intelligent investors practice what I call rational spending. This means eliminate emotional purchases, eliminate status purchases, eliminate fear-driven spending, keep essential or value-creating spending. Continue small joys that maintain morale. You see, my dear friends, spending is not the enemy. Unconscious spending is. Living like a monk is not a strategy. Living with intention is. 6. Protect your mind more than your wallet. During every inflationary period I observed, the strongest investors were not those with the highest income or the smartest models. They were those with stable emotions, a long-term mindset, clarity under pressure, consistency in their habits, the ability to ignore noise. Inflation attacks the nervous system, but intelligent investors train their minds to remain steady, even when prices rise around them. In other words, financial survival begins in the psychology, not in the spreadsheet. 7. When you think long-term, inflation loses its power. Inflation hurts the person who thinks in days, not the person who thinks in decades. Short-term thinkers feel inflation as pain. Long-term thinkers feel it as weather. It may rain, but the prepared traveler keeps walking. My dear friends, these principles form the backbone of how intelligent investors weather inflation without fear, without panic, and without losing themselves. Now, let us move to the final lesson. One that will carry you forward not just through today's inflation, but through every era you will live to see. A practical, modern blueprint for surviving inflation from 2025 to 2035 and beyond. Let us continue. Modern inflation strategy for 2025 to 2035, my final blueprint. My dear friends, now that we have examined the psychology of inflation and the behavior of intelligent investors, let us bring everything together into a practical, modern blueprint. One that will guide you not merely through this year's rising prices, but through the entire decade ahead. Because inflation is not a moment. Inflation is a cycle, and cycles reward those who prepare, not those who predict. Let me show you precisely how an intelligent investor navigates the inflationary world of 2025 to 2035. 1. Build a foundation of financial stability first. Before any strategy, before any investment, before any plan, you must establish the single most important protection: stability. Stability means a small but durable emergency reserve, no high-interest liabilities, predictable expenses, clarity of monthly cash flow, no emotional spending leaks. Inflation punishes the unstable and barely touches the stable. This is why the foundation always comes first. It is not glamorous, but it is freedom. 2. Strengthen your income stream every year. The most powerful weapon against inflation is not a single investment. It is not a speculative asset. It is not a prediction. It is growth in your earning power. This can come from improving a skill, acquiring a new one, negotiating compensation, freelancing, or consulting. Starting a small side operation, leveraging technology to scale productivity. Inflation erodes passive wealth, but amplifies active strength. A person who grows his income 5 to 10% per year outpaces inflation over time without needing risky returns. 3. Invest in businesses that can pass costs forward. Not every company survives inflation, only those with pricing power, loyal customers, essential products, durable competitive advantages, strong balance sheets, real earnings, not projections, can withstand rising costs. An intelligent investor studies profit margins, input sensitivity, debt maturity, cash flows, customer retention. Inflation destroys weak companies, but it strengthens companies that know how to adapt. Follow the survivors, not the storytellers. 4. Diversify across inflation-resistant categories. Here are the timeless principles. Own productive assets. Businesses that generate cash survive inflation better than assets that simply sit. Avoid pure speculation. Speculation collapses when liquidity tightens. Keep a portion in liquidity. Cash will lose purchasing power, but cash will save your mind and give you opportunity during panic. Consider pricing power assets, real estate, essential goods, certain high-quality equities. Avoid fragile investments. If it requires constant optimism to survive, inflation will destroy it. 5. Do not let inflation manipulate your emotions. Inflation uses fear as a weapon. You will hear, everything is collapsing. You'll never afford anything again. You must act fast. You're falling behind. These messages are designed to push you into impulsive behavior, but intelligent investors know inflation is not a crisis. Inflation is a condition. And conditions are navigated with discipline, not emotion. Your calmness is your competitive advantage. 6. Think in decades, not months. In the short term, inflation feels overwhelming. In the long term, inflation becomes background noise. The investor who thinks in days feels panic. The investor who thinks in decades feels nothing at all, because over a decade, your skills grow, your income rises, your investments compound, your habits strengthen, your clarity increases. Inflation cannot defeat a long-term thinker. It may slow you, but it cannot stop you. 7. The ultimate lesson. Inflation has limits. Your mind does not. Governments lose control. Currencies fluctuate. Prices rise and fall. Cycles begin and end. But your ability to think clearly, behave rationally, and act with discipline is not tied to any economic environment. Inflation can touch your wallet, but it cannot touch your principles unless you let it. An intelligent investor is not shaped by conditions. He is shaped by philosophy, by process, by restraint, by clarity. Final words. My dear friends, inflation has intimidated every generation, and every generation believed their inflation was the worst. Yet those who prepared calmly, who built discipline, who strengthened their earning power, who protected their purchasing power, and who refused to panic, those investors not only survived, they prospered. Let this be your path. Protect your foundation, strengthen your income, invest in resilient businesses, keep a margin of safety in life and in money, stay calm through cycles, think in decades. Inflation is a challenge, yes, but it is not a verdict. The verdict is written by your decisions, and you, my dear friends, are far more powerful than rising prices.